Okay, so good morning, everybody, and welcome to this Insight Hour, the special Insight Hour. So, if this is your first time here, it's great to have you here. Normally, this is a session that I run weekly inside of our accelerator, but today we're opening up to the wider community because, well, the summer markets are some of the trickiest times for traders to stay clear and consistent. Volume's lighter, capes gets choppy, fatigue can start to set in, not to mention beautiful weather and plenty of other distractions too. From what I've seen, though, especially in the last few weeks, is a lot of traders start to feel like their system is breaking down. And if you've been in that camp, today's for you. Now, my goal here is to help you reset your thinking, tighten your process, and walk the stretch well. So that way you're ready when the next leg of opportunity shows up. So before we dive in, quick show of hands. You could click that little button or drop it into the chat. How many of you would say that the last 2 to 4 weeks have felt tougher to trade well? See Lee, Patrick, Payush, Linton. And let me double check the chat over here. Now, I'll raise my hand too, because it certainly has been a little bit tougher. Yep, David, as well. So it's unanimous. It has been tougher to trade these last few weeks. So that's what we're going to work on today. Let's start with a quick reflection. This will be an exercise, so feel free to grab yourself a piece of paper. I've got my index card here. Grab yourself a pen, or you could even drop it into the chat. It's all up to you. I want you to think about your trading in the last 2 to 4 weeks and honestly answer the following questions. First question, are you following your entry rules consistently, or have you been forcing trades? The last 2 to 4 weeks, are you following your rules consistently, or have you been forcing trades? That's question number 1. Question number 2, are you adjusting position size and risk based on current market tone? So if, for example, for our Accelerate members know this, well, one of the things that we like to do is when the market is steadily moving higher, trades are working, we use a technique called progressive exposure, where we'll take the profits from the existing winning trades, recycle them into the next trades, and so therefore we start to trade bigger. Are you adjusting position size and risk based on the current market tone? It also goes the other way too. When things aren't working, we want to be trading our smallest when things are not working. So that way it limits the drawdowns. Have you been doing this over the last 2 to 4 weeks? That's question number 2. Question number 3. Are you sticking to your exit rules, or are you letting emotions drive exits? This can be tricky, especially in the moment. Entries tend to be a little bit easier for most people than the exits. Entries tend to be a little bit more clear-cut, a little bit more planned, a little bit more predetermined. The exits tend to be a little bit tricky. So let's do our best to be honest with ourselves when thinking through this over the last 2 to 4 weeks. Are we sticking to our exit rules, or have they been emotionally driven in some way? And finally, the 4th question, are you journaling and reviewing your trades, or has that part slipped a little bit? Yeah, take another moment or two and write those down. And if anyone wants to share one thing, yeah, let's keep it to one for now. If anyone wants to share one thing that stood out, feel free to raise your hand and I'll call on you to unmute, or please feel free to drop it into the chat. Linton, go ahead. I see your hand up.
Hello.
Hi.
Yeah. Sometimes I'm forcing trades, and for number
Mm-hmm.
two, I sometimes average down, which is a wrong thing to do. And
Mm-hmm.
for the journaling side, I only journal what I think is important and what I did
Mm,
right or successfully trade right. I should be
okay.
more consistent in journaling everything, even the wrong trades. That's
That
it.
that's a great insight. That's a really great insight. And being aware of these kinds of things, that's a leadership moment right in itself, because it starts to shift and put you not just ahead of the crowd, but it helps to position us uh, to make these what are actually more micro corrections, journaling a little bit more, journaling a little bit more holistically. Those kinds of things can help to create awareness and help us to uh, step back onto the path. So thank you for that. Um, Anyone else? So we'll take one more here. Pat, go for it, Pat. Unmute
Okay,
yourself and all right.
I can say that I feel like I've noticed improvement to answer the questions specifically. Following the rules for or forcing trades, I would say that I am mostly following the rules established within a trading plan. But I did notice some emotional based trading.
Mhm.
I have an example on spot, the one that
Okay.
you're still in. I watched that move the day you took it, and I'm not still sure. I do know that I didn't have how I didn't follow my plan is I could have put that I could have placed that order, yeah, before market open prior to that and not even being on the computer. But I happened to be on the computer that day and I watched it move and I was late and I watched it and there it went. I kind of feel like I missed it. So otherwise, when I look at other examples of closed trades, I would say, yep, I followed my routine and my plan. As far as position size, absolutely. That is not a problem.
Mm.
Concern there. Exit rules, again, a mix of both. Mostly following uh, my developing trading plan, but some emotional based selling. So,
Mhm.
and then finally journaling. Yes, I am journaling all my trades.
Awesome. Thank you for that, Pat. Yeah, and when it comes to following rules and being consistent with them too, you and I have worked together uh, a little while now, one on one. And one of the things that I've seen you do, Pat, over the past, uh, how long has it been now? Like 2 months. We've been working together on your business plan. One of the things that I think that you've done and done very well is actually taking the time to write out what those rules are and getting that structure. Uh, how it what would you say is the difference between having it actually written down versus it just kind of living in your head?
Having it down in front of you, it simply forces you to address it and look at it. If it's kind of just floating around in the back of your head, you may or may not at that moment have the list of criteria deeply embedded within your thought process. Having it there serves almost like a checklist that fosters discipline, which is so critical in what we're trying to all do here. You have to have that discipline, and having it there in front of you is a resource. It's like a resource I use to trade effectively.
Absolutely. And it helps to keep it fresh in your mind too. And I say this not just for you guys here. This is just for me as it is for you guys too. We all need to continually sharpen our saw, as they say. And that part of sharpening the saw doesn't go away whether you have a year of experience or completely brand new to trading, or if you've been trading for 20 plus years. We have to continually sharpen, otherwise our edge gets dull. So yeah, Pat, thank you for that. And Ing, I just saw you join in. Welcome. So just a reminder, everybody, we'll keep ourselves muted. If you want to make a comment or ask a question, just click that little hand raise button to raise your hand, and I'll call on you and you can unmute yourself, or please feel free to use the chat, and I'll continue to monitor the chat throughout. So let's go through 3 key things now that can help you walk this summer market very well. And that I say that even if your system has felt a little bit shaky these last few weeks. Now, the first thing, key number 1, read the tape well. What does that mean? Read the tape well. Not all markets are going to deserve your full risk. Not all markets deserve your full risk. One of the biggest mistakes traders make is treating every week like a green environment. Right now, it's what I would consider to be a yellow environment. That means we walk with lower risk, more patience, and higher process discipline. For example, if leadership is narrowing or breakout failure rates are rising and setups are thinning, that's part of what I would consider a yellow tape. It doesn't mean that we don't trade at all. It means reduced risk and perhaps even more selectivity. So let's see. Brett just joined in. Good morning, Brett. Since we've got more people on the call today, just a reminder, but it's still, I might have to mention this a few times, but just whenever we want to speak, click the little hand raise button, raise your hand, and I'll call on you. You could unmute yourself, or feel free to use the chat. I'll be monitoring that as well. All right, so reading the tape. So how many of you currently adjust risk based on market tone? Raise your hand or type into the chat yes or no if you adjust your risk based on the overall market tone. If you're using a similar traffic light system like we are in the accelerator program, green, yellow, or red, that counts. Or if you're doing something else where you're adjusting the level of risk that you'll take, the position sizes that you put on based on the market environment, just raise your hand or type into the chat yes or no. Let's see. Pat, Lee, Eng, looks like Brett as well. Okay, so we've got about half of the group here that is adjusting based on market tone. half the group is not adjusting based on market tone. All right, let's see that. I think that this one shift of adjusting risk based on market tone, and market tone can be, it's not one where I would say that it necessarily even needs to be just if you're trading a similar style to myself, or to if you guys are, if everybody in this room, again, this meeting is an open meeting, so we have a lot of different styles in here, I'm sure. But even if you're not trading a O'Neill style like Can Slim, or Mark Minervini style, even if you're trading something like say Forex or crypto, or anything like this, we could still adjust our risk and use techniques of progressive exposure based on overall market tone. When we're doing well, we have profits that can finance additional risk, and we can begin to scale up in a reasonable way. And we'll be able to discuss that part in a little bit detail later on. But we could still scale up, we could still scale down when things aren't working. So that way we're able to keep our equity curve rising, be more aggressive as things are working, and then when things stop working, to be able to scale down. So that way we're able to keep our equity curve at a reasonable level. So that way when things do begin working, we're not digging ourselves out of a hole, we're climbing or continuing to climb up the mountain. Does that make sense? Okay. All right, great. So key number 2, protect process over P&L. In these kinds of markets that we've been seeing, chasing P&L leads to breakdowns fast. And why these kinds of markets? Specifically with stocks, the indexes have been grinding their way higher. We did get a little bit of distribution yesterday, but overall the indexes have been grinding higher for the last couple of weeks, and stocks have been kind of hit or miss. So I think that your job, no, I know that our job is to protect our process. So how do we protect our process? We need to, number one, follow our entry criteria. And that presumes that we have an entry criteria. It's either follow our entry criteria or we sit out. If we're trying to chase a trade just because it's moving, that's no good. If we're chasing a trade just because somebody else mentioned it and maybe it doesn't quite fit our process, then we should still sit out. The only time to take a trade is when it fits our entry criteria, period. That's one of the ways that we begin to evolve from trading as something that's more of a hobby, or something where we're trying to, it might sound dirty, but almost trying to get rich quick, right? If we're just trying to take the trade that's not in our process, then that would fall into that kind of category. It's almost where this is an example that I've used in one of my books, where you can, if let's say that you were selling dresses, right? You have your dress store, and then all of a sudden there's a sale on cabbage, right? So you decide that, oh, I'm going to go and put this right next to the checkout because, hey, you know what? It's just this once. I got this deep discount on cabbage. I was able to get it for pennies on the dollar. Let's just see if any of this stuff sells. Well, I wouldn't do that for a dress store, right? Like, people would think that you're nuts, and you'd probably never see your customers again. Well, same kind of mindset is for trading. We need to stick to our process and whatever that process happens to be. Second part of process over P&L is sizing down if the market tone demands it. We mentioned that earlier in step 1. And number 3, and I believe that Linton, that I believe you were the one that mentioned this earlier. Number 3 is journaling, even the small trades, even the trades that we may not have taken, some of the ones that may not have been quite as good. Journaling and having that mindset reflection matters the most. That's one of the things that helps us to stay on process over P&L. And I'd also add to this too, reviewing the journals, reviewing the plans. I had just put out a new trading business plan. I had my trading business plan. I worked on evaluating it, evolving it, and rewriting it over the last couple of days while the market was closed. And I had one of the great things with having it typed up in a Google Doc is that you could actually pull it up on a device like your phone and have it dictated to you or read to you. And funny enough, I didn't know that the phone was able to do that. I just learned that feature today. And on the ride home, I had a doctor's appointment this morning. So on the ride home, I had the trading business plan being read to me on the ride home. So point is to reinforce, or to find ways to reinforce what our plans are, what our journals are, so that way it stays fresh in our mind. It's not meant to be something that we do just once. It's meant to be a living, breathing document. This is how we start to compound trust in our systems and in our processes. That's what pays off when the market is strong. So here's a question for all of us. Think about the last trade that you took, whatever the last one was. Was it process driven or was it P&L driven? The last trade that you took, was it process driven or was it P&L driven? If you're brave, share it in the chat or raise your hand if you want to walk through it. I'll give you guys a moment or two here. Anyone want to share? Just raise your hand or type into the chat. All right, Pat, I had a feeling you would be the one.
Well, I hate to, I will go ahead and just admit that my very last trade, I think I sent you an email, or I know I communicated with you about it, but it's the last one that was closed. It was a trade that was not on from a list that I would refer to. It was from somewhere else. And it didn't vet it properly, and it was from a outdated means of trading, and it didn't. It wasn't a success. Well, I mean, it's to say it's not proper. It was a losing trade. I'll say that it was a losing trade. But it was a bit of the light bulb kind of went off for me, that kind of reinforced my confirmation that if it's not on a specific list that I refer to, then I'm not going to trade it.
Interesting. Do you think that you would have had that insight if the trade were a winner?
Well, that's a good point. It could easily be along the lines of what you just said, is, well, just this one time, it'll be okay, and that's fine. So really the answer should be no. I mean, you have to, I'm sorry. The answer is no, it should be no. if it's not part of your system, you have no business being in that trade. End of story.
Right. If we're in the selling red dresses business, we can't have cabbage sitting out at the counter.
Exactly. So that was kind of an aha moment for me this last week.
That's good. And so it sounds like it actually turned out to be a blessing that it was a losing trade,
I think
because that helps to shine the light bulb on, hey.
exactly. That's exactly what happened. Looking at it, and that's, where was this within my plan? It was nowhere to be found. So
Awesome. Thank you for sharing that with us, Pat. All right. Let's talk about key number 3. Build daily leadership habits. Now, the summer tests our leadership more than it tests trading skill. And the way that I think that we could think about this is, number 1, having some sort of a daily market reading ritual, even if there's no trade. So what does that mean? Well, I'll give you a personal example of what I do every day, whether I'm in the market or in cash, is every day I am looking at the 5 major indexes, the S&P 500, NASDAQ, Russell 2000, New York Stock Exchange, and the Dow. I'm looking at them across time frames. I'm assessing trends. I'm running screens, or I'm taking a look at my universe list. I have the stocks that fit the criteria that I'm interested in, high growth stock criteria. And I'll go through that whole list and I'll see, are there any of the stocks that are setting up in the types of patterns that I look for? And then when I find those setups, or if I don't find those setups, that's feedback from the market. So every day, whether I'm invested or I'm not invested, I'm doing that process because it helps me to keep my fingers on the pulse of the market. Having some kind of a daily read, well, whether you're doing something similar or whatever your process is, we want to have a daily market ritual that keeps us in tune with the market and with our process. We also want to have some sort of a small reflection habit. Journaling is fantastic. That's been mentioned here a couple of times. And even if it's just a couple of bullet points a day, that's enough. What's more important than what gets written down is the habit of doing it. If you don't have the habit established yet, at least begin to get into the habit of just writing down a couple of bullet points for the day. You could start with what you're seeing in the market. Maybe you're not seeing much of anything, and so you're a market assessment, that market read part of the ritual. Maybe what you're feeling that day about the market, or maybe it could be about a particular trade. Some days you might have a little bit more to write than others. It could be personal reflections too. Personal reflections could be whatever happens to be going on in our day-to-day lives. It could be something that happened to us at work, or something that maybe we're excited about a particular opportunity and it seems like it's getting ready. Maybe we've done a little bit extra homework on this idea, and so we're journaling about that. Taking all that and putting pen to paper helps to solidify things, and it also gives us a way to refer back to what we were thinking yesterday, the day before that, the week before that, the month before that, and it helps for our process later on when we want to review our notes. And finally, this third one here, faith and mindset anchors. When the tape is slow, we need to be able to lean into patience and trust and not force. So when it comes to faith and mindset anchors, a lot of people may think of faith, and I do too. Well, like I think of faith as my relationship with God. I think that we could also translate that kind of faith into our trading, because we if we have something like our journal or business plan or something like that, and we're able to lean more into patience, one of the ways that we're able to do it is to have something that we're able to go and reflect on. That's why, like, I've got it all just written in this book, and how I mentioned before, in a Google Doc, and this thing is talking to me. I'm able to sit here and flip to it, and there's everything that I believe. So that way, even though I know it, it helps to reinforce some of these things. So here's another question I have for you guys, or a reflection. What's one habit you know you could lean into a little bit more right now to walk the whole rest of the summer better? What's one habit? One of the habits that we mentioned, with daily market reads, or a small self-reflection, or faith and mindset anchors, or if there's another one that comes to mind. What's one habit that you could lean into more right now to walk this stretch a little bit better? Drop it in the chat, or raise your hand if you want to share, and I'll call on people. Anybody? Here we go. David. David says, consistently looking at the market and being updated. Wonderful. Ayush, a better understanding of the overall market. Yeah, that's looks like that's a consistent one so far. Anybody else? Yeah, having that market read is very important. Pat, go ahead.
I think you just mentioned something that really has never really been at the forefront of my mind. Is it? And it basically just got covered, but knowing what the market's doing. I mean, I rely on, a lot of times I rely on what your assessment is, and sometimes it feels like it's after the end of the day. I've never really thought about it at the beginning of the day, or just kind of having a better sense of what the market in general is doing. That's kind of what I'd like to work on, as well as jotting down a few thoughts about any potential trade that I see setting up ahead of time.
Mm-hmm. Yeah, those things can be very good, especially when we have the time to do them. And I think that that's an important point as well. Well, we want to structure our trading and our trading business around what we're able to do, not just on our best day, but on our worst day. Well, when maybe we've got a whole string of meetings one week, and it's very busy, and maybe we might not be able to do those kinds of extra market check-ins, or it might be a little bit sporadic. Well, what do we do on those days? We could bake all that stuff into the plan. I think that part of it too is giving ourselves a little bit of grace. It could be very easy, and I used to fall into this trap too, where I'm in a group, and I see other people that are outperforming me. Other people are getting wins. I'm not. What are they doing that's different? And I'm thinking back now to when I was still working at the day job. I worked in a hospital for many years, and the trading was something that I did at night on weekends, and would start to set orders so that way they'd be able to trigger without me needing to look at them. In fact, that kind of setup is more or less the same kind of setup that I do now because, well, it worked then, it works now, and it lets me coach people. But when other people start to, well, or when we start to look at somebody else's process and try to say, well, why are they having success and I'm not? Maybe I should do a little bit more. We need to give ourselves the grace to realize that their chapter 20 is going to be a little bit different than our chapter 1 or our chapter 2 or 3. It takes time to get there. Give ourselves the grace to grow. I think that's a very important point for all of us to remember, myself included. Thank you for that. All right, let's lock this in, right? So we spoke about a lot of things here. If you were to pick one leadership habit that you'll commit to for just 2 weeks, right? To start to really lock in one of the things that we've discussed here today. We've discussed 3 big keys: reading the tape, protecting process over P&L. Remember that's following our entry criteria, sizing down if the market demands it, and journaling even the small stuff. Number 3, building daily leadership habits, things like having a market read ritual, small reflection habit, or having a faith mindset anchors. If you're going to focus on just one of these things over the next 2 weeks, what's one habit that you'll focus on committing to? It could be one of those things that we just shared. It could be something else that maybe you're sitting here listening to this and it's something that you know that you need. What's one leadership habit that you'll commit to for the next 2 weeks? Take a minute and write it down. And this is for you. This isn't for anybody else. But if you want, you can drop it into the chat or and commit publicly or raise your hand and share. But this is really where real edge gets built. It's in making a commitment to ourselves and following through on these commitments. So whatever we commit to, and I've made an error in the past, and I've gotten better at this. I would overcommit, right? Like I would come to a meeting like this and be like, oh wow, all these points sound good. I want to do all this and try to dive in head first. When we try to do too much too fast, sometimes we could fall off a little bit, then beat ourselves up, and then before you know it, within a couple of days, this kind of stuff slips away. But if we take our time and think about, well, what's the absolute minimum that I could do each day? Let that be the one to start with. And that's something that can help make it a little bit stickier. So do you guys have one? Let me see. Thought I saw a hand go up. No? Let me check the chat here. Payush says accountability. Accountability, better accountability. How will we maintain accountability? And if you want to share, Payush, awesome. If not, you don't have to. But I would encourage you to get clear on what accountability means. How will you stay accountable? Is it through a writing exercise? Is it having an accountability partner? How are you thinking? No, you've got your hand up. Go for it, Payush.
Yeah, I think, Mike, ultimately you're the person that's putting the trades on. It's your trading plan, it's your process, and those results are dictated by your plan and your process and the way you execute and the way you manage your risk. So ultimately, you're accountable for those trades. Nobody's forcing you to put those trades on. You're doing them off your own back based on what you see. Now, if those results are not coming to fruition, then obviously there are signs coming out of that. And as you said, look, I've started a journal now, so I think it's very important to journal. I go quite deep into my journaling now just to get a better understanding of the types of trades I'm taking, the entries I'm taking, the stop loss, the level of risk, how the market was, and what my thinking was at the time when I took the trades. I'm really trying to work at this game. It's not easy. Let me tell you now, it's not easy at all. It can be very frustrating. Over the weekend, I do go through a lot of sort of charts and try to hone down a list of trades that I'd like to look at and action. But when Monday morning comes around, the market spins on its head, and sometimes those setups that you saw probably go out the window very quickly because we don't know what's going to happen over the weekend, Mike, do we? There's all kinds of stuff that's likely to happen over the weekend that may dictate what happens on Monday morning.
Exactly.
We could say at the moment, look, let's be honest, we are in a choppy environment. We are in an absolutely choppy environment, a choppy market environment. Like yesterday, a lot of people will look at the stock called A-Lab, which was a semiconductor, great setup. Everything was ready to go. Yeah. And what happened sometimes halfway through the day, there was a news feed that came out whereby the US government were, I don't know, they were putting a halt on semiconductors that were being imported in. I can't remember, something of that nature anyway. But like I said, so then all the semiconductor stocks got slammed, and including A-Lab, which was the perfect setup. You know what I mean? Everyone was looking at Tesla. Tesla was a good setup yesterday. But again, it just didn't work out. I think yesterday, the pre-markets were very good yesterday. And then as soon as the market opened, there was a lot of profit taking going on. And then after that, it just went pretty much chop, 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 chop. And nothing was working. But anyway, yeah, I probably ranted on a bit.
No, that's quite all right. Thank you for that. So accountability. This is what you mentioned there with a lot of stocks popping and dropping, and it's not uncommon. Sometimes I felt that it's I could get dialed into what's happening right now and forget what happened yesterday or the day before or even last week. And it's important to adjust to markets and to adjust to markets quickly, but it's also, I find it important to know not just where we're at, but to understand where we've come from. I want to share my screen for a moment because there was something that I just added to my process within the past week. This is one of the things that when I was redoing my trading business plan, that this part came up that I wanted to focus on a little bit closer. And so I keep an action list, and I update the action list every day. And on the action list, I have stocks where I'm placing working orders for. So it's one of those where I'll set a buy stop limit. I'll attach OCO orders where I have my profit target and my stop loss, and I'll just walk away and I don't need to look at the trade anymore. Then I have alerts, and I had all these, right? And I would have it just, I would move it down if it triggered or if it didn't trigger, or if I didn't take the trade. But something that is brand new that I just started tracking is this part right here. Let me make this a little bit bigger so that way it's easier to read. So over here, I added a couple of columns. So that way it's makes it a little bit easier for me to track what stocks, not just what stocks had made my action list, but what they did after the fact. So now I'm able to see, well, did the stock close above the pivot on the breakout day? Yes or no? Did the stock move with volume, either on the pivot or within the last 5 days? Because sometimes stocks will break out and volume comes in a little bit later, right? So we've got that. Did the stock achieve a gain within 2 to 3% after breaking out? Because sometimes, and we've seen this a lot too, where stocks will be profitable and then they'll pull right back in. To your point, Astro Labs fits right into that, where it was profitable and then here we are a day later, and that's no longer the case. And also, for me, I like to use the 10-day exponential moving average because that's I trade a lot of growth, a lot of momentum, and that's one of the key moving averages that it typically holds, especially right at the beginning of the trade. So does it have this criterion? So I'll track these 4 things on the stocks that make my list, whether I end up trading them or not. And that's what I've learned on the last few trades here. This is from Wednesday going into Friday, since Thursday was the holiday. I had QFIN, FTAI, Duolingo, and Dash all on my list. I didn't trade any of these names. I just had alerts set up on them. And what happened with every single one of them, none of them closed above the pivot. 2 out of the 4 had heavy volume. None of them closed with a gain. All but 1 held the 10-day exponential moving average. So this starts to give me a little bit more feel of how the market is treating the setups that I feel the best. Now, well, we have a bunch of people in this room that will have all unique ways of looking at the market and all unique setups. Even if we are trading a cup with handle or a BCP or a flat base or whatever, we'll have our own way of seeing the names. Having something like this helps me keep my finger on the pulse of, well, what are my setups doing? And this here would help me gauge a little bit better of, should I be getting a little bit more aggressive or should I not? Or should I be dialing things back or should I not? Because if the best setups are not working, well, then should I be aggressively buying? Well, anyway, that was just one little thing there that I thought would be helpful.
That was awesome,
Okay.
Mike. That's great. That's good stuff right there. I do real similar myself with what you just explained on what's holding the 10 EMA or an 8 EMA. So I thought that was brilliant.
No, thank you. Brett, are you doing that with the stocks that make your action list, or the ones that are setting up, or are you doing that in some other way?
If so, like, let me see here what the date was when so like I am real similar in watching that chart of whatever name I'm in or studying, watching. Hood is a great example. I entered Hood on May 7th. I'm still in it. Of course, I've sold some into strength, but it's still holding and closing above an 8 EMA every day. I do have a hard stop just below where a 10 EMA would be on that particular trade. Because the reason is because if it does go below that, that's a huge change in character for what it's doing. And
Yeah, absolutely.
so if you were to look at that chart, you'll see exactly what I'm talking about. And the stocks that I'm in are doing this exact same thing. Whatever their character is if it closes or goes below that character, that's a character change, and I'm out.
Right. So I think that this is a fantastic trade, and not just a fantastic trade because it happened to be up about 50%, almost 60% on its way there. But if we take this, right, because I believe you entered in somewhere in this vicinity, am I right?
Yes, sir.
So if we take this and put it up against that, those four things that I started to track earlier, right? Or the number one, was it up on the breakout day? Did it close positively above the pivot on the breakout day? Yep, sure did. Was volume up? Let's bring the chart back up. Yes, volume was above average. 2 to 3% gain within the first 3 days. Let's see. Yeah, was that 6% gain on day one, 10% gain, up to 10% gain on day two, 12.5, 13% gain on day three. So met that criteria very well. And then 10 EMA support, you better believe it. 10 EMA for a while, it had the 5 EMA. So having an awareness just not of this one name, but to start to be like, how is the market treating breakouts? Well, if it's treating the types of setups that I trade like this, and I start to see that, hey, it's treating more of the setups that I like this, then that's one of the things that starts to give me a little bit more confidence in stepping on the gas, being a little bit more aggressive, starting to scale in a little bit heavier. And it's not where we're going gangbusters per se, right? It's not about like saying, oh, I'm going to take my whole account and throw it in to any name. No, risk management's always first, but it lets me know what my appetite for risk should be. Yeah, I think that Hood is an excellent example. Thanks, Brett, for bringing it up.
You're welcome.
I see a question that came in from Payush. How many are you watching when the market opens? It really depends. For me personally, it depends on how many stocks are setting up that I feel are A+ level setups. If they're not an A level setup, then I might have it on a different list because I like to know breadth. So if a stock is consolidating in one of these patterns, and in my in the business plan I have it model book setups all laid out here. I don't know if you could still see my face on this, but I have it in the binder. I also have in my spreadsheet here a tab for where I have the types of setups that I like to trade. And so any stock that makes the list that I'm going to focus on, it has to have this, everything in the must-haves, right? Well, whether it's a pullback, a cup with handle, flat base, whatever. And then the ones that make it to that action list also have a variety of these boosters that take it from good to great. And it also closely matches one of these models here. So that way you can see like there's this whole verification process to make sure that whatever it is that I'm going to focus on, hey, this one, if it does start to work, this is one where I would want to put my money. Not just one that happens to be moving because it's up on the day or it's because somebody else mentioned it. Whether I admire the person or not, it has to fit this criteria. So some days will be more than others. Some days there might be 4 or 5 names on that list that I'm looking. Some days there might be 0. On average, a typical day, maybe 2 or 3. All right, so yeah, as we wrap up, if today helped reset your thinking and give you clarity, my encouragement is this: don't try to walk the rest of this market solo. Most traders, from my experience, work part-time. Most traders have jobs, they have families, they need structure and support to trade well without burning out. That's what we do inside our accelerator program. It's a system with coaching tools, community, everything that you need that helps you trade with clarity, structure, and confidence. We do sessions just like this one every single week, plus deep dive into trade reviews, daily game plans, live accountability. If this is something that you know that you need, I'll drop the link into the chat. Let me do that now. There's the link. You could check that out. But either way, remember this: your edge isn't built in hot markets. It's built in stretches like this. The reason why is because this is where we can focus even more on process. We can lead ourselves well. You'll be ready when the next window opens by protecting your process, leading yourself well. And that's really about it. So I appreciate each of you. I'll hang out for a few minutes. If anyone has questions about what we covered today or want to talk about how we work inside the accelerator, feel free to ask. You could raise your hand and I'll bring you back online. You could unmute yourself. But yeah, I'll happy to hang out here and answer any questions that come in.
How many people are on that aren't in the accelerator right now, Mike?
Right now, let's see. We've got about 35.
Well, I just want to give Mike a shout out that he is an excellent leader. He's a great coach. And if you're not in the accelerator, I highly recommend it. So I just want to say that and throw that out for Mike.
Thanks, Brett. I appreciate that.
Definitely seconds that. Well said. Well said, Brett.
Yeah, it's about building process. It's about walking together to get a result, because I know how difficult all this stuff could be to do it all on your own. After struggling for a decade trying to do all the stuff on my own, it was when I was finally able to get around other people that were walking a similar path. That's what finally helped me to have success. And that's why I wanted to put together a program where we could walk together and be able to reach out to people, ask questions, see how processes are working in real time, not just the profits and the polish and razzle dazzle. It's seeing the bumps and bruises, seeing what it's like to get your hands dirty. See what it's like when things don't work or when things are tough, like this last couple of weeks have been. How do you adjust? And that's what real trading is. It's not just about the good times. It's about knowing how to manage the challenging times, knowing how to manage drawdowns. And that's the kind of stuff that we work on in the accelerator. And of course, knowing when to step on the gas too, because that's a very important part of this game. Had a couple of questions come in from one of our newest members. He signed up yesterday, Andrew. Andrew wasn't able to make it to this meeting, but he sent me a couple of questions that he wanted to see if we could dive into. So the first question that he asked was, how should we develop actionable trading plans for these scenarios where the S&P is moving one way and the stocks that we're looking at are moving another way, right? Because sometimes they're not always in sync. Sometimes you'll have a rising market and stocks are dropping, or you'll have the indexes flatlining or even going down, and all of a sudden, underneath the surface, the stocks that we're interested in are setting up. So how do you develop actionable trading plans for these kind of scenarios, and what frameworks or signals should we rely on to trade confidently when stocks in the market are out of sync? There's a three-part framework that I use for this. And the three-part framework, just coming here to my journal, and some of you have seen me hold this sign up a million times. You could probably guess what it is. For those of you that haven't seen this, it's this 3 lenses of market readiness. So whenever I am evaluating the market or trying to keep my finger on the pulse of the market, I'm not trying to look at it through any one lens by itself. I'm looking at it through all 3 lenses. And when all 3 lenses line up, that's when it's in this green zone, which is fairly rare because, like Andrew had mentioned, that sometimes you have market going one way, stocks going another way. That's most of the time. So it's going to be pretty rare when we'd want to be full throttle, sizing up to our absolute maximum size, putting on the absolute maximum risk, where maybe we're risking 2% of capital on a single trade, or we've got, for me, the largest size that I'm willing to go up to is 25% of my capital in one trade. That's exceedingly rare. Most of the time, we're in this yellow zone where we are now, where sometimes you'll have the market going one way, you'll have stocks going the other way. So what does that mean? Well, it doesn't mean that we sit on our hands and do nothing. What it does mean is that, well, we take the trades that are A+ trades. Whenever the market gives us an A plus trade, we should be taking that. And the way that we know if it's an A plus trade or not is by having our model book, like I shared earlier, something similar to that. And if we do find those trades, then we put them on. The question becomes, well, how much do we put on? That's why this traffic system turns into a progressive exposure guide. And so when I'm in any kind of a trade, this is what I'm thinking to size. So for a yellow condition like what we're in right now, I would be looking to put on 12.5% capital allocation maximum. Maximum, that's important. It's not where every single one it's going to be 12.5%. No, I give myself the grace to go lower than that if I want, but I'm capping it at 12.5. Same thing with risk. Risk 1% maximum. But I think that the key here isn't, well, Mike says 12.5%, so that's what I'm going to do, 12.5%. No, I think that the key here is the progressive exposure part, where if the market is changing, to have a mechanism where we're either scaling up or scaling down, and to have a way to identify what kind of a market we're in. And that's, well, we had alluded to that earlier in the chat. This is starting to give you a little bit of a sense of how I do that personally. And that's how, that's part of what gets shared inside the accelerator. As you guys hear it, that are with us live, if you have questions on any of that, feel free to unmute yourself or raise your hand, or type into the chat. And just get your questions and raise your hand ready, because if not, I've got a couple of other questions here that we could go through from Andrew, but all right. The second question that Andrew had, it's about dynamic exposure. So the specific questions that he had were in sideways or slightly bullish market environments, should we be investing at all? If so, how much? Should we be 10% invested, 50% invested, 100% invested? Is there a systematic way, such as using a set of market conditions or indicators, to dynamically calculate a recommended exposure limit? Ideally, this would help avoid being overly aggressive during downturns or overly conservative during uptrends. Yeah, so what we just discussed with this red, yellow, and green environment, with the three lenses of market readiness, that speaks to that. But also, I want to share with you another thing that I just added to my trading business plan. Now, this plan was just sent out. I spoke about it on the Traders Mind Chat show podcast yesterday during that live broadcast. So if you weren't there, it's on YouTube. It'll be on Spotify pretty soon. Check that out. But the whole trading business plan, this updated plan, was sent to everybody who purchased the Trading Success Blueprint ebook and the business plan that I had at that time. I just sent this out as a free upgrade for that business plan, so that way everybody has it. But the new thing that I added to this, to make it a little bit clearer, because this was actually one of those things that's in my head, but it's so important to not just have it live in your head, but to get it out onto paper. And so I'm so glad that we had the extra day to be able to do this. It's a new rule that I came up with called the 10 and 2 rule. So to increase exposure responsibly as performance improves. For every 10% of account growth, I allow a 10 to 20% increase in capital allocation. So what does that mean? That means that, say you're starting with 100 grand. If your account goes up to 105, I'm not increasing size yet. When the equity curve gets up to 110, the account grows to 110, that's when I'm willing to start to take some of those profits and increase my size with them. So if I'm risking 1% on a trade, I would start off risking $1,000 per trade. When I get up to 1,010, then I would start to risk $1,100. Right? So that way I'm not getting ahead of myself. And by having these kind of benchmarks, it makes it a little bit easier to keep track of. Now, it's not just an automatic thing that I'm looking to jump to that level of exposure. I would look for the market to be in that green condition. We started to talk about that a little bit earlier. I would want to have at least 3 of my last 5 trades be winners. So that way I have that capital to recycle into the next couple of trades. This is what progressive exposure is about. It's about taking profits and using those to finance the additional risk. And of course, the equity curve is rising. If the equity curve is falling, then we're not putting more capital at risk. And also, this 10 and 2 rule, it also has a way to scale back down too. So I reset capital size if either of the following occur: 3 consecutive losses or a 4% drawdown from peak equity. Because and I have that clause because sometimes in a strong market environment, our account value, our P&L will continue to rise, and it'll continue to rise, and we haven't closed out a trade because we'll stick with the winning trades. But if, let's say we're at 110,000, in this example, it goes to 115,000, 120,000, and then all of a sudden from 120,000, it drops back down to say 110, right? At that point, I would start to reset the capital size. Why? Even if I didn't sell any of those trades, the reason why is because I want to stay near account equity highs. And when the best trades start to move like this to the point where my entire account starts to have those drops like you're on a roller coaster, that's a signal to me that, okay, this is a time to bring it back down to the normal size and then wait for the next upturn to start getting aggressive again. And that's how I manage that. All right. So I think that answers Andrew's questions. Yeah, that answered both of them. So yeah, Andrew, later on, when you get this, let me know if you have additional follow-ups to that. But anybody that's here, what other questions do you have? I see a question come in from David. Do you have a YouTube channel, and how often do you post if you have it? Many thanks. I do have a YouTube channel. I have 2 live streams. One on Monday, one that I do with my friend Dennis Wilborn, and I have one that I do on Fridays. I will post the YouTube channel into the chat, so you have that link there as well. Yeah, there's a lot of great content on there, and both of the shows are live streamed. So if you're able to show up live and participate, you're able to get questions answered there live, and we'd love to have you. But all the recordings are there. All the recordings are available immediately on YouTube. Any other questions? All right. If there's no other questions, then we'll wrap things up. So it's great seeing you all here. I hope that you got a lot of value from this, and I look forward to talking to you all again real soon. Take care, everybody. Have a great rest of your weekend.
Have
Thanks,
a
Mike.
fantastic weekend, guys.
Bye, Brett. Bye, Lee. Take care, Linton, Eng, David, Luther.